You've likely already heard the housing market is broken in 2023. In this video, I'm going to look at why the housing market is broken, some supply and demand dynamics, and what to expect going forward. All right, Matt, the mortgage guy, residential mortgage broker, powered by you mortgage, licensed across the country, 47 states so far, soon to be 50. If you want to connect me and my team, go to greatmortgagebroker.com, fill out the quick form, we'll get you started. In today's video, I want to talk about the broken housing market. This gets talked about quite a bit, but they got Crash Bros side that the housing market's going to crash and home prices are down 50%. I don't know how long they can continue saying it with a straight face when it doesn't seem to be happening. And the reasons behind why we can see 35% destruction of demand and still not have prices fall. It's because of this supply demand dynamic. So I'll jump into it. I'll show you some graphs and hopefully it provides some clarity and is useful for you. Supply and demand. This is, the simple version of why we're in such a broken housing market. So let's talk about it. This is a chart that shows household formations when, Johnny or Susie flies the nest and they go from living in mom and dad's basement to go start a household of their own. It's a household formation. This gives you an idea of what's going on with demand. This has to do with demographics and other things on how many households are being formed. So, of course, we got the big uptick in these COVID years, but besides that, relatively predictable and flat. We've got the current, which is 1.417 million, which is right above the average, right? And so households are being formed at a slightly above average rate. So that means that demand is going to continue at about the same pace we've seen it. Now, let's talk about new housing supply, because this is another hot topic, right? Is construction's going up all around me. They're building like crazy. This is going to cause an oversupply. And with oversupply, home prices are going to crash. Let's look at the numbers, right? Numbers don't lie. Housing starts 1,700K, otherwise known as 1.7 million, are the number of housing starts, and about 100,000 get demolished, put out of use. That's the destroyed annually number. Total new supply, 1.6 million, let's call it. And then we look at the new housing demand, which we just saw was 1.4 million. That would tell you that with 1.4 formations and 200,000 in surplus, like we're going to have 1.6 million in supply and 1.4 million demand. Like we're ahead of schedule. We're building more than we need. Prices should come down. Here's the problem. Not all those housing starts get completed. So if you take the completed number, which is 1.3 million, and then subtract out that 100,000 in destroyed annually, then 1.4 formations and 1.2 million in supply creates a deficit of 200,000 homes. And we already know that the number of shortage in the housing market is in the millions, right? There's just not enough homes. Record low existing home inventory. This has been a problem, continues to be a problem, and there's no real resolve for the record low existing home inventory. We've known it, and now with people that are landlocked, sitting on a 2.75% rate, no incentive to sell, those that are buying forward more and more often are choosing to keep the home they're leaving versus listing it and selling it just because they've got that 30-year fixed rate debt at such a low cost that it makes sense to turn it into rental, or they're not selling at all, right? So inventory continues to go down, and not building fast enough. As we saw, we're at a deficit after a decade of deficits. 2010 to 2019 was the lowest period of new construction completed since the 1940s. I'll say that again because it bears repeating. If you look back on how many homes were built per decade, you won't find a decade that had lower number of homes built than 2010 through 2019, unless you go all the way back to the 1940s. Is that wild to think about? In the 50s and 60s, more homes were built in those decades than 2010 through 2019. Obviously, there's more people, so there's more household formations and still less homes being built. So, these bumps that you see is just seasonality. Homes are being gobbled up in certain months as people are moving, and then inventory goes up over the winter months when less people are moving. And so that's just a seasonal thing. But the trend that continues, it keeps getting lower and lower. Anemic is a term that's been used to describe only 1.03 million homes. And it's funny, you look at how low inventory was during this latest crater on this seasonal chart, and people be like, oh my gosh, look at home inventory is up 50-60%. It's like that every year, dummy. Like, it literally goes up every single summer as more and more stuff gets listed and more and stuff gets transacted. So anyhow, I won't belabor that point. The real story about existing home inventory: 1 million homes, which sounds like a lot, right? And I guess 1 million's a big number. It's small compared to averages or what we'd want to see. 600,000 of those are under contract. Only leaves us with 400,000 what they would call actives, right? That is crazy low when you think about existing home inventory. And this will show you, like on a chart, how crazy low that is. In June of 16, up in the top left, we've got 1.55 million homes. April 2022, 409,000. And this just continues to get worse. 2023, it's even worse. All-time low vacancy rate. And I'll kind of end with this, right? Where, it lends itself, besides there just not being a lot of inventory and no imminent danger of a lot of inventory hitting the market, with the resale homes and the current people not looking to list and move when they're locked into such a low interest rate and such a great payment. Builders aren't building as much as it might look like, right? There's a lot of new construction going up in a lot of places, but the numbers don't lie. It's not even enough to keep up with the new housing formations. If there was, vacancy and people owned a few homes and couldn't rent it and said, you know what, rather than the carrying costs, I will just sell this thing. Vacancy rates are historically low, 0.8%. And so there's no pain in the market. And pain is what would cause prices to come down. Pain is what the Crash Brothers want. I mean, a lot of people are rooting for home prices to go lower. It's just not happening. So I don't see a world in which we see huge price declines. What I will say is that I've said it here and I've said it on multiple interviews. Every market behaves differently. So you might see a Sacramento, California go down 5% year on year from the peak. You might see in Austin, Texas, a Boise, Idaho, some places in Florida, come off of those all-time highs. but it's very unlikely to see these 30, 40, 50% home price crashes that those are calling for. And it's really a supply versus demand issue. So time will tell, but based on numbers, the Crash Brothers got to come up with a new story. Thanks for watching.